Let me begin with America's Swan. America's Swan delivered sequential and year-on-year growth, driven by strong performance in consumer, technology, and communications. However, the healthcare sector was impacted by seasonality and policy changes. Americas too declined sequentially and on a year-on-year basis. For us, the BFI sector was impacted by delayed ramp-ups on some large deals that were closed earlier this year and by certain client-specific issues. Europe grew sequentially and has remained flat on a year-on-year basis. In fact, we see good traction in the UK, specifically in the BFSI sector. We also see strong deal momentum in Germany. APMEA for us grew sequentially and on a year-on basis. Growth was driven by Southeast Asia, and we are also seeing traction in the BFSI, technology, and communication sectors in this market. We are encouraged by the momentum we are seeing in the APMEA region, both in performance and the bets we continue to make there. A strong example is a strategic deal we announced recently with the Olam Group, expected to exceed $1 billion in contract value, with a committed spend of $800 million. In fact, this is one of our largest engagements to date in APMEA region. For the client, we will drive end-to-end transformation across farm-to-fork value chain, enhancing their operational effectiveness, resilience, and scalable growth. As part of this agreement, we are acquiring Fineprint, the Olam's IT and digital arm. And I would like to take this opportunity to warmly welcome Fineprint's leadership and employees to the Wipro family. I'm hoping some of them are watching here. In this quarter, we also closed several strategic engagements. Let me highlight two examples with two global technology leaders who drive AI at scale and how we are partnering with them. In my first example, a leading global technology company has engaged us to help run and improve their frontier AI models. We will manage end-to-end operations of these AI models, from training, governance, and evaluation to domain-specific validations. In fact, this engagement will be done through a specialized global delivery platform. We will make these models more accurate, reliable, and safe, while ensuring they can be deployed and managed at scale. In my second example, we have been selected by a leading global semiconductor company to provide engineering services that accelerates their product development and manufacturing across complex hardware platforms and at locations spread globally. We will support the entire engineering lifecycle, from product development to performance testing analysis, before the final shipment to their end clients. The client will achieve faster resolution management, higher yield, and improved governance with AI-driven analytics and automation. As intelligence becomes industrialized and widely accessible, we are making deliberate strategic pivot to stay ahead. As you all might be aware, we have launched a dedicated AI-native business and platforms unit to expand beyond a services-only model to a services-as-a-software approach. This unit will operate with dedicated leadership, focused investment, and a distinct operating model to accelerate enterprise-grade agentic AI solutions. This unit will also incubate new AI-led businesses through an invest-build-partner approach and collaborate with Wipro Ventures and our entire partner ecosystem. Together with core services, this creates a dual engine model, driving transformation at scale while building AI native platforms that differentiate services, that enables repeatable deployments, and of course, unlock nonlinear growth for us for the future. With that, let me move on to our guidance for the next quarter. In Q1, we are guiding for a sequential growth of -2% to 0% in constant currency terms. Let me now invite Aparna for a detailed view of our financials. Thank you. Over to you, Aparna.
Thank you, Srini. Good evening, everybody, and thank you for joining us. Let me share an update on the financial performance for the quarter and year ended 31st March 2026. Our IT services revenue for Q4 grew 0.2% sequentially in constant currency terms and plus 0.6% in reported currency. Revenue declined 0.2% on a year-on-year basis in constant currency terms. For FY26, our IT services revenues declined by 1.6% in constant currency. Our operating margins for the quarter was at 17.3%. This was a marginal contraction of 30 basis points over Q3 and 0.2% contraction year on year. With this, our full year operating margin stands at 17.2%, which was an expansion of 15 basis points year on year. We maintained our margins in a narrow band even after absorbing 2 incremental months of our Harman DTS acquisition and 1 month of salary increases. We rolled out our salary increase effective 1st March of the previous quarter. As we move into Q1, we do have headwinds, including the impact of recent large deal wins, impact of 2 incremental months of salary increase, which could cause some volatility on a quarterly performance. However, our endeavor will be to maintain the margins in a narrow band in the medium term. Net income for the quarter was at 35 billion rupees. Adjusted for the impact of labor code changes, net income increased 3.7% sequentially. Our full year adjusted net income increased 2.2% on a year-on-year basis. This is after absorbing the restructuring charges that we took in Q1 and Q3. EPS for the quarter was at rupees 3.3 and rupees 12.6 for the full year. Moving to our performance in our strategic market units and sectors. All growth numbers that I will share are in constant currency terms. A1 grew 0.3% sequentially and grew 2.9% on a year-on-year basis. Americas 2 declined 2.6% sequentially and 6.7% on a year-on-year basis. Europe grew 2% sequentially and was flat on a year-on-year basis. APMEA grew 3.1% sequentially and 8.8% on a year-on-year basis. BFSI declined 1.3% sequentially and 0.5% year-on-year. Health declined 4.4% sequentially and was flat year-on-year. Consumer grew 1.7% sequentially and declined 2.9% year-on-year. Technology and communication sector grew 5.3% sequentially and grew 10.4% year-on-year. EMR grew 1.1% sequentially while declining 6% year-on-year. Let me share some other important financial parameters. Our operating cash flows continued to be higher than our net income and was at 112.6% of net income for FY26. Our gross cash, including investments, was at $5.9 billion. Accounting yield for the average investments held in India was at 7.3% in FY26.
Okay, that was